Ken from smartforexeducation.com, weekly review commencing 24th of June 2013. So we're looking at a daily time frame here on the gold chart, and the previous weekly review we did was prior to the FOMC 2-day meeting that commenced on Tuesday, Wednesday, and basically what we've seen that is pretty clear. What you can see what's actually happened here. Ben Bernanke actually came out and stated, signaling an end to the bond purchases early next year, and they will start to potentially reduce the bond purchase program towards the end of this year. It's most probably commencing in about a quarter, and but this is purely based on the continued strengthening of the US economy. So based on that, gold has totally plummeted. It broke through the previous lows, which was around May. It then broke through the April lows. So we've actually now, if I zoom out here, we've now broken through the 2011 lows and penetrating towards 2010. So the market's taken a massive hit. It's positive for the dollar. People are taking money out of safe haven, plowing it into other asset classes, and really it's just dollar denominated here. That's the play. We've seen that Friday's market slightly rebounded by about $30, nothing significant. So next target really is looking for, if we do see some form of a short covering rally, I think the maximum we'll see this price get to will be around the previous low, which was the support, which is now resistance at about $1,322 an ounce. That's really, I think, how far this price can potentially get up to within the next week. That's on the positive side for gold. Apart from that, this market will probably try and continue lower to the downside. We don't really have any significant strong support levels to really that stands out, except for the $1,154 an ounce. If you draw in some trend lines, maybe you can really spot some levels, but this is really far-reaching. Let's just take it from the lows here, 2005, 2008 lows. So we have around here $1,041 an ounce. Really gets a bit desperate to the downside for traders, and you can see that people are just running to the sidelines. A lot of people who had also gold, physical gold, are trying to sell their gold because of just fear that this market's continued to collapse. So really, for the weekly review is just to keep yourself aware. Look for some huge volatile price movement. The dynamics of trading in regards to your strategy has to be slightly altered risk management wise. You cannot obviously look at having a $5 stop, because this market moves very, very quick. You can see here this was a bounce on Friday morning, which bounced from 1,269 all the way up to 1,300 level. So we're looking at about a $30 move in the space of a few hours. So you're seeing some huge swings now. So you need to look at not increasing the amount of risk you take, but increasing the size of your stop. Keeping the risk the same, but increasing the size of your stop. So just a heads up. Speak